President-elect Trump is set to take office in January and, on the campaign trail, pledged to make updates to the tax code, including making his 2017 Tax Cuts and Jobs Act permanent. Tax expert Sophia Duffy joins me now in studio. Sophia, great to have you here with us. So how might Trump change our taxes and what would be the permanence of that?
Well, I would be remiss if we didn't talk about a little bit of end of year tax planning as well. So we're entering December. We know that there are some kind of last minute tax reductions that we can take advantage of, like tax loss harvesting and all that. But as far as the incoming administration for President-elect Trump, we know that he has pledged to make those provisions permanent, meaning it's sort of status quo for the things that we've been doing so far, right, since the Tax Cuts and Jobs Act was implemented. So taking advantage of small business owner deductions, the standard deduction. But we also are seeing many proposals that are new and may create a different impact for us. So one of the proposals, for example, is eliminating income tax on tips and overtime. And that could really change the way that wages are structured, particularly for small business owners. They may be able to offer incentives to some employees. They may find that very attractive, right, if more of their wages are paid in tips, for example. And then there's another proposal to reduce the corporate income tax rate to 15%. So it was reduced to 21% under the Tax Cuts and Jobs Act, and that will further be reduced to 15%. Now, if that happens, we may see more and more small business owners converting their entities to corporations. So as far as planning today, we don't really know what to do today, right? Because we don't know if any of those will come to fruition. But what we could do and what a smart planning step may be is prepare for that. Do some research today and say, does converting to a corporation make sense for my entity? Does creating, a different wage structure for my employees make sense? And doing that research today so that we could effectively pull that trigger if the time does come. And also if it makes sense for the business. We don't want to convert to a corporation and then find out we're paying more in legal fees than we're saving in taxes, right? So as long as it makes sense for the business, but doing that planning today could be very beneficial to taxpayers.
You talk about some of the planning that can be done today. I mean, we have 133 days until April 15th. What should people be doing right now?
So today, there's a few last minute tax impacts that we can implement today. For example, increasing charitable deductions so that we go over, the standard deduction might make sense. We could also take advantage of a strategy called tax loss harvesting. So I know we're reaching record highs in the stock market. This may be a little bit more difficult, but for anywhere where we're seeing losses, you can actually realize that loss today and then use that to offset some capital gains with other investments.
Does any of this have impacts for how people prepare for retirement as well?
Retirement, there's so many things going on with retirement. So not only just with the incoming administration, but we know that there are some regulatory changes that have happened recently, such as the Secure Act 1.0, 2.0, that have made contributions towards retirement plans easier, right, for the American public. And that was meant to address this kind of widening retirement gap that we see. There's also some sort of looming threats, right? So even though retirement plans are easier to contribute to, they're more flexible, customizable, we know that the Social Security Trust Fund, by 2033, it won't be able to meet its current obligations. So what I would imagine may happen, or some proposals that have been on the table, are things like pushing back the full retirement age a few years, increasing the Social Security wage base so that more of wages are taxable for Social Security, and then maybe eventually even seeing a reduction in benefits by almost as much as 21% for some taxpayers. Those types of provisions, if they're implemented, will help increase the longevity of the trust fund. And then we're also seeing some consumers proactively planning for that, right? Social Security used to be sort of the crux of a retirement plan.
Right.
But as consumers are starting to realize that maybe they can't rely on that as much as they used to, we're seeing a shift towards planning vehicles like annuities to kind of replace that fixed income of Social Security. And then also we've seen an embracing of Roth IRAs and Roth conversions, because they may anticipate that, my taxes are probably going to go up over time, right? It's just not feasible to think that they're going to stay low or at the current rate forever. So by doing those Roth conversions and contributing to Roth IRAs, whatever tax impacts may happen down the road, we can kind of mitigate that risk today.
As the Fed continues to combat inflation, how should people who are close to retirement best plan their nest egg for the ability to outlast future years of inflation as well.
You know, this is where a financial advisor can really help individuals. And tax planning is such an integral part of retirement planning, right? They really go hand in hand. An advisor can really help individuals to understand how to reduce that long-term tax impact across all phases. So even if you're 15 years out from retirement, it's not a bad idea to meet with an advisor and say, how much should I be contributing today? Sure. And what would make sense so that the tax drag on my long-term portfolio is as low as it can be. We're not going to eliminate it. Then there's people in retirement or maybe a few years out. How are their tax strategies going to change as far as that long-term impact? And then eventually, many people don't even think about this until they're entering their 60s and 70s, but how can I leave my assets to my beneficiaries and my heirs and have the lowest tax drag on that as well? And that's where advisors, specifically advisors that are educated in tax planning, can really help clients, small business owners in particular, to meet those needs and be able to create a financially secure future.
Sophia, thanks so much for making the trip up from Philadelphia, joining us here in New York City on set. Appreciate it.